Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Bank of America stock, and that is chiefly because they announced earnings today. And I think that this is very important because it does present us with a really nice opportunity. And that opportunity can even be highlighted here on the screen over the 5-day experience here in terms of a percentage return. So the stock on the past 5 days is down right at 4.5%. And the reason why I like that, the reason why I'm happy about that, is because when you look at the charts here, and we mentioned this a while ago on our video kind of previewing, is we expected the banks to have lower levels of reserve than was anticipated. That happened. Higher levels of higher levels of income associated with trading revenues, which we saw Morgan Stanley, Goldman Sachs do very well with, and Bank of America continued that trend, as well as Citigroup and JP Morgan, but the interest income was not there, and there were heightened costs associated with it. So due to the fact that all of that happened, trading went down, as well as the forecast for the economic recovery across the big banks said that it was going to go down. Now, that being said, with banks being in the business of making money by loaning money, it is in their interest to say that the market is not going to get better from a interest rate perspective, because that will encourage people to go out and get more loans. So there's the capability there in terms of kind of why they're making that narrative, as well as from here on out, the bar has been set very, very low for them. So if that bar is low, that enables them going forward to be able to go out and beat expectations going forward. So I'm already interested to see how that will frame earnings going forward. You can already see that this year compared to in years prior is much lower, even all the way going back to 2017. You can already see some of those earnings are much lower. So that being said, as you can see, we actually stayed within the range, kind of matching expectations, but they still expected higher ends on the revenue side. So with it going lower, the question is now the time to buy Bank of America? So one of the items that I always highlight is whenever the annual dividend yield gets at 3% is the time to buy. And the reason for that is because that's when a lot of other people go in and buy. And this is a stock that when it trades at that level, it's a good time to get in. I also want to highlight that Bank of America, as I've stated on this channel multiple times, is the second largest holding in Warren Buffett's portfolio in terms of the balance or the amount owned. And it is the highest stock holding in his portfolio in terms of the number of shares owned. This is not a company that's going away, and there is a lot of value here. So as well as the fact that there is a 3% or a near 3% return on the dividend side, what is the growth prospect for this stock going forward? When we look at the charts, ideally what I am looking for is to trade at or around $23 a share and to get back to $28 a share. If we look at the year-to-date mark, this is about the level that I'm looking at, or this is about the level I'm looking at, around $28 a share. The reason that I highlight that is because I don't have any expectation of returning to the $35 a share that we saw just a few short months ago, a few short quarters ago. And the reasoning for that is interest income is not going to be coming back anytime soon. However, Jamie Dimon over at JP Morgan said that going forward into next year in 2021, the ask would be that they're allowed to be able to start share purchase buybacks again. If that is the case, then I anticipate that Bank of America, who has a massive balance sheet, if we look at their fundamentals over here, they have a lot of cash on hand that they're capable of using to go out and purchase. These charts look a little deceptive, but if you look over here, these are millions and millions of dollars on the asset side and thousands on the debt side. So they have a lot of capability to go out and buy back more of their outstanding stocks, and that will boost the share price. That is the short-term value here, is going into Q1. So if we can take advantage of that, you get paid to wait for that price growth. So the idea is hopefully they'll continue to go down tomorrow, and that'll enter a nice buy point, and we can get into the stock at that point in time. Again, preferably closer to the 23 mark, although I'm not opposed to the 23.50. If that is the case, again, this is a position where you can build 100 shares with a relatively low entry point in terms of cost, right at $2,300, $2,350. Once you have that, you can sell covered calls, but you get paid 3% to wait. And again, you just want to get out around that, or my target is to get out around that $28, $29 a share, depending on what's going on at that point in time. So there's a lot of value in the stock. I'm a big fan of Bank of America, as everyone on this channel knows. This is just my opinion here, but feel free to check it out. And if you found this content helpful, please leave a like and subscribe. Thanks, everyone. Talk to you later.